Hi friends, today I'm going to share with you the no market risk ETFs to park your money while the market is doing this.
New York and Toronto falling so far, so fast, it triggered automatic trading halts.
These bear markets are emblematic of the moment because they're nobody's fault.
Well, you saw the worst day in financial markets since 1987 in the United States.
But why you should think of these no market risk ETFs, let me help you. In 2023, we officially faced a recession and bear market. But what it means to the Canadians investing in the market regularly? Oh no! Various things, to be honest. Some people have fear of investing in the market and take out their money, while others keep investing by using the method called dollar cost averaging. But what if you are too scared to do any of these and don't want to invest in any ETFs, stocks or bonds or anything which comes your way? Well, it's very natural to think that. In fact, people even park their new cash into their brokerage account and wait for the market to digest this downturn. A great example of that is the pandemic time when the fear was so high that almost $5 trillion was sitting on cash in the US economy, and I'm sure that Canada had the similar issues, but I did not find the article for that. Now, if you are one of those people who likes to park their cash and wait for the market recovery, you might be losing a significant opportunity to earn interest on your parked cash if the cash is parked in the brokerage account. Because most brokers don't pay any interest on your parked cash, and those who do, they pay very less. I was one of those people for a very long time, and my $40,000 was parked as cash on my brokerage account. So if you're in the same boat as me and thinking, what should I do with the money? Should I take out that money and put it in my GICs or something like that? Or should I put it somewhere else? Probably not. You can buy an ETF. Wait, not that kind of ETF. This ETF will have no impact based on the market recovery or market downturn because it is not impacted by market at all. Instead, it is moved by the interest rates. These types of ETFs are called high interest savings accounts ETFs or called HISA ETFs. HISA ETFs, HISA ETFs, HISA ETFs. So you are technically not risking anything into the market, but instead it is giving you the interest on your cash as a part of dividend. And you know, when the market is down, the interest rates are generally high, and this is where you can leverage your parked cash by making some money out of it. I'm not going to go in details of all the HISA ETFs available in the market, but I'm going to choose a specific one. Because for the most people, this ETF called CASH.TO by Horizon makes the most sense. And no, they are not sponsoring this video. Now let's see what is this CASH ETF and how it will help you to earn interest on your parked investments. CASH ETF's dividend is around 4.95 as of March of 2023, and it keeps changing as the government is changing the interest rates. And they deposit your money in these 3 bank accounts, at least as of now. And they pay the dividend on monthly basis, so the risk of investment is pretty low. Because we are not investing our money into the market and we are not subject to the market risk of up and down, this is what we want, right? Let's see a little more details about the CASH ETFs to understand whether we should trust it or not. Currently, it's holding around $2 billion in the investments from what I saw, and it constantly changes based on the changes in the outlook of the retail traders like you or me, who might put in the money or even take out the money depending on the market conditions. Their management fee is around 0.10% to 0.13%, which means that you are paying around 10 to 13 cents for every $100 you invest in this ETF, which is not a lot considering you are not getting anything right now for the cash which is sitting in your brokerage account. Something is better than nothing. And the good part is this ETF can be purchased on all your accounts, whether it's your RRSP account, your TFSA accounts, your FHHS, or your FHSA account, or your regular margin account. The price of this ETF, at least as of now, sits at $50 at the start of the month, and it constantly increases throughout the month to support the partial investments. And once the dividend is paid out, it resets back to 50. And that's why the chart looks something like this. So here you don't have to worry about the technicalities or the NAV values for this ETF at all, because it does not relate to us and it's not related to market at all, and there is no growth happening in this ETF. But there are other NAV related HISA ETFs available in the market like HSAV if you are interested in that, where you do not get any dividends but it's reinvested as a part of stock and the stock value increases. For those who don't know, HSAV is also managed by Horizon, so if you don't know about it, let me know in the comments and I can probably create a video explaining about that ETF as well. Now let's go to the advantages and disadvantages of parking your cash in this CASH ETF. But before we do that, I would really appreciate if you could hit a like button, which encourages me to make more videos like this. And it also tells me that I'm not speaking to a wall, but actual people. So what is the advantages of parking your cash in cash? Well, for starters, it's more liquid than your GICs, which takes at least 1 year to unlock. Here you can literally get the dividend every single month. And because the price is adjusted every month, even if you are selling in between the month, you are still getting that half value. And because it's an ETF, you don't have any minimum. So you can literally buy one ETF stock of $50 and can still make... The investments are diversified across different banks, so you are not putting all your eggs in one basket and you are not stuck. And best of all, it's literally making money for you when your cash is just sitting on your brokerage account doing literally nothing. But you might be thinking, what's the catch? Well, I'm here to share the information and not to sell this ETF, so I will give you everything you need to know. For starters, unlike any other ETFs, this does not grow and does not have any past performance, so you cannot treat it as your long-term investments, and you need to take out money as soon as you feel that you want to invest in the market. The other thing is to make sure that you are not paying a lot of fees or commissions on your ETF purchases, otherwise it will make things useless unless you have a good amount of money sitting or parked for your investments. And the last and the most important thing which you should be aware about is that this ETF is not CDIC insured like your GICs. So if something happens like it happened in the United States where the banks bail, you might have to rely on Horizon as well as the government to help you out because the money is not insured. So definitely there is some risk involved, but the banks they have chosen are not small banks, and at least I am taking that risk to park my investments at least right now. And I'll tell you, I already made $150 last month, so not bad. But if you don't like that, you can probably open an account with a broker who pays some interest on your parked cash. For example, Interactive Brokers. They provide some interest on the cash parked in your account, and it gets better once you cross $100,000 in the parked cash in your account. And no, unfortunately, the Wealthsimples of the world, the Questrates of the world, they do not provide anything like this. So if you want to open the Interactive Brokers account, you can probably use my link in the description. That might give you some free trades initially and will help you out. Even if you want to open Wealthsimple accounts or Questrade accounts, I have linked in my affiliate link, which provides better deals than the regular referral links, and hopefully that will help you out. And of course it will buy me a coffee. Now finally, if you have watched till now, I hope you enjoyed the video, and if you did, and if you want to consider subscribing, that would be great because I make similar videos every week. So thank you for watching, and we'll see you in the next one.